What's up, everyone? Xavier here with Team Finesse. I hope everyone's having an amazing week. We have some really exciting news about Team Finesse. We are now a one-time fee platform. That's right, just a one-time, and you get us for life, guys. We understand there's a pandemic going on, and things are a little bit difficult now. We want to make this information as affordable as possible and help open doors for people that didn't even know they had access to. Check out our website, forexwithfinesse.com. Share the news, guys. If you're new to the channel, please hit that subscribe button. We're always putting out some great trading tips. So we've been getting a lot of requests for Elliot wave and divergence. So we're going to knock it out in this one video. Now, you guys know how we do things here at Team Finesse. We keep it transparent. Elliot wave and divergence, they're not one of our primary confirmations to enter a trade. It's kind of like on the back burner, you know what I mean? You want to have multiple confirmations before you execute. These two just aren't one of our primary ones. All right, so let's get into it. So if you guys don't know how to add an indicator in TradingView, it's going to be located right here on top, indicators. Now, the one we have the most familiarity with is the RSI indicator. And the RSI pretty much tells you momentum of price. So this indicator is used to identify divergence. So all divergence is, it's a disagreement of price and market structure. So if we look at the chart, right, we look at the candles, we can see this triple bottom level right here, right? And on a horizontal level, it's in the same area. So let's draw a little representation for that, right? It's not trending in any direction. It's coming to this one area. Now, if we look at our indicator, our RSI indicator, it doesn't line up, right? Our RSI is not flat like how it is on the charts, right? It's kind of uptrending a little bit. So that tells us even though it's flat here, there's hidden divergence. And since our indicator is uptrending, it means that price may have a upward momentum. All right, so it's not a guarantee, guys. It's kind of just like an early warning sign. So if you like to structure trade, you can use the RSI to find hidden divergence. You always want to pay attention to the market that you're in, whether buyers or sellers are in control. It's not enough to trade just off of market structure. You have to get the whole picture. Now, this is where Team Finesse style comes into play. Let's take a look at the daily time frame. So we have the knowledge about the hidden divergence, right? But on the daily time frame, we can identify areas of sensitivity or a zone, right? So we're not going to enter the buy yet, even though we have the hidden divergence and we have the triple bottom, which is a great indicator for a buy. We dropped it down a time frame to get the entire picture. We just identify a zone. So what's the next safest entry, right? For the buyers to prove to us that they are indeed in control by breaking our daily zone. And we would then look for price action around the area upon a retest for our entry. Finesse. Next up, we got the Elliot wave theory. Man, I told you, we started trading over 5 years ago. We had our trials and tribulations with Elliot wave, to say the least. All right, let's look for an example here. All right, guys, so the Elliot wave theory is pretty simple. The market moves in waves, right? It doesn't just shoot up, it doesn't just shoot down. So we kind of have like a move up and then a pullback, a move up and then a pullback, right? And it's not just going like that. And then similarly for the sell, a move down, a pullback, a move down, a pullback. So in the Elliott wave theory, it says it moves in waves of 5 and then 4. So let's take a look at AUR USD on our daily time frame. So you can see the waves in this uptrend, right? The move up, the pullback, the move up, the pullback, the move up, the pullback. This would be 1, 2, 3, 4, and 5. Or S. So where are you likely to take your entries, right? On the pullback. So 2 and 4. So after we've had the 5 waves, price is set to reverse in a wave of 4. Oh, sorry about that. And this time it's A, B, C, and D. So same thing. Where would you take your entries? B and D, right? So the thing with Elliott waves is that you can't tell how deep the retracement is going to be. All that you have to know is for the wave to be a valid wave, it has to look like this. So one can't come back all the way down like that. That's not a valid Elliott wave. It has to stay right here. It cannot break this initial push. The team finesse way is we identify areas of sensitivity as usual, and we look for breakout and retest, right? Because think about it, guys. What are these areas of sensitivities? They're battlegrounds, right, between buyers and sellers. So if one can beat another one to continue going in this direction, it's a safe bet that it's going to continue going. And then what can we see here? So what do we see? Sellers managed to beat buyers to the downside, came back in a retest, and then we have the move down, right? Isn't that the same thing as the Elliott wave? A, B, C, D. But we used market structure and candlesticks to tell us that, not necessarily the wave. That's why I like drawing zones on the time frames. They paint a better picture. Thanks for watching our video, guys. If you learned something, please hit the subscribe button. It really helps us out a lot. Drop some hearts in the comments for this little guy. His name is Toby.